Let's first talk about why you shouldn't take financial advice. And then I will give you some financial advice. Hey guys, welcome to the High Ground. My name is Fabio, and today I'd like to talk about a topic that is not too much related to the outdoors, but that is financial preparedness. Now, with everything going on in the world recently, with the bankruptcies of Silicon Valley Bank, with the close to bankruptcy of Credit Suisse and it being taken over by UBS, with the real estate bubble in China, I think it merits that we talk about financial preparedness. Now, I work in the financial industry. I'm not a financial advisor. I'm more on the law side of things. And I'm quite interested in investing my money in a way that is sustainable and that prepares me for crises that might come. A few days ago, I was on a bigger talk regarding financial preparedness, and I was very interested in that topic. The speakers were more or less educated. One of them was a former associate professor, teacher from a business school here in Switzerland. The other guy was just, I don't know why he was there. He didn't have any credentials really. But since the talk didn't cost something, it was free. So I went there and checked it out. And I have to say, I was pretty disappointed. And I'd like to tell you why and why you shouldn't take financial advice, and then talk to you maybe about a little bit a different viewpoint, what you could invest in, but in a different way. Now, let's first start why you shouldn't take financial advice. And I'm taking this from the talk I was there. So first of all, if you know a little bit about economy, despite the first speaker being, as I said, an associate professor, he was tainting all the numbers he gave to the audience in a very specific way. So if you actually knew something about economy and how a balance sheet looks and how all of this stuff works, right? Then you could really easily see that he was pushing a certain agenda. In the end, his big pitch was to buy cryptocurrency. And I'm not saying if you should buy cryptocurrency or if you shouldn't, but it was just a very good example of somebody who, in the first instance, sounds smart, but is using his knowledge, maybe his economic vernacular, to really bait people in a direction where they might or might not need to be. In my opinion, I would never advise somebody to invest in a certain financial vehicle because it really depends on your personal situation. I will give you an example. Now, I live nearby Zurich. How it works in Switzerland is that people buy real estate, then they put a mortgage on it to finance it. The mortgage generally has an interest rate, and is usually something like a 10-year mortgage with a fixed interest rate. Now, after those 10 years, they haven't paid off the full mortgage, but they have to refinance it. And there is the crux. Now, all the interest rates went up all over the world, in Switzerland, in the US. All the interest rates were raised to fight the impeding inflation or the actually happening inflation. This will have, in my opinion, the effect that 2 years down the line, 3 years down the line, when a lot of those 10-year mortgages are ending and people have to refinance their homes, they will likely not be able to pay the increased interest rate. And that means you will likely be able to buy cheap real estate. Now, this is a general assumption that I just take. Why shouldn't you go ahead and now speculate on buying real estate in 2 to 3 years? Well, for example, here in Zurich, the available real estate compared to the people that actually want to have a real estate, there are so few free real estates, free buildings, apartments, etc., that this price drop actually likely won't happen. It should happen, but what really will happen is that a lot of people who are renting now will just be able to buy a cheaper real estate, but people will immediately move into Zurich and get the now empty apartments. So within the Zurich and the agglomeration around Zurich, the real estate prices likely won't sink. So you have to be really careful if you apply general statements like the real estate prices will sink to your specific situation. You should do a lot of research before you really decide to make an investment, and not make an investment just because somebody tells you something that sounds plausible on a first instance. Another example, I mean, as I said, that guy was into crypto. He showed a a curve of the development of the Bitcoin price from 2011 to 2021. Yeah, of course it looks awesome, but from 2011 to 2021, it was hard to not make money. I mean, you could throw money against the wall and you got more in return than that you originally threw. But he was intentionally not showing 2022, where the Bitcoin price dropped from $60K to 15, right? And if you bought somewhere between 2015 and 2021, then you made a loss. So I mean, don't nail me on those numbers, but you know what I mean, right? So if somebody tells you something, you always have to really check if they're sincere. Why are people doing that? I mean, if you see it in the internet, especially in the crypto realm, a lot of people just want to rip you off. I don't think that this guy at the talk really wanted to rip people off, but he had an idea. He was invested in this idea with crypto and with gold, right? A lot of preparedness stuff going on there in his mind, and he wanted to have confirmation for this idea. And that's a normal human trait. You want people to join in your idea, especially if you have something at stake, right? Because it will give you the feeling that you're right in that regard. And that is something with the human motivation that you have to really be careful with. Why are people telling you something? It doesn't have to be malice, right? Maybe it's really just their psychological space they're currently in. So yeah, that's the reason why I would never take investment advice. Another example for investment advice that is not really tailored to your situation would be the other guy. He said basically, yeah, buy rice and bullets. I mean, I'm all for rice and bullets and having a certain stockpile, right? You should, with the groceries and the food you have, it would be good to make it over 2 to 3 weeks, right? That's really good, and it's also necessary to have the necessary gear to defend yourself, right? That's all good, but as soon as you're a little bit further down the line with your savings, right? Maybe you have a 401k retirement account or something like that, a Swiss pension fund, and you're really asking, yeah, what do I do with that, right? Don't go ahead and buy a ton of rice and 70,000 rounds of 2 to 3 ammunition. I mean, that makes no sense, right? It might just go bad. You have a lot of risk, all eggs in one basket, etc. So this type of advice is also only tailored. Yeah, if I would have maybe 5,000 Swiss francs, $5,000, I wouldn't invest them at all, so that I have them in cash if something bad would happen. If I would have only 50,000 Swiss francs, yeah, maybe I would buy a sufficient amount of ammunition. I would buy a little bit of stockpile with food and stuff that I need. But as soon as you get into an area where it just doesn't make sense to invest everything in one asset, right? You really have to think about what you're doing, and then any decision you make has to be informed and based of research that you did, not of an opinion from anybody, and it has to be tailor-made for your situation. And hardly ever does somebody from the outside really have all the information the person needs to make a decision for you, right? Because it's different if your long-term goal is to buy a farm, right? Then you might want to invest in an asset that is generally high in value when the real estate prices are low. So don't invest in a real estate fund, right? So stuff like that. So this is why, in my opinion, you can't generalize investment advice, and why you generally shouldn't listen to investment advice. For my investment advice, I want to take a different angle. And what I found interesting, remarkable, in the discussion on this talk that we had afterwards, there was a Q&A, an open forum. People were focusing a lot on, what do I have in order to exchange it against something. That might be money, that might be gold, food, etc., right? I come at it from a little bit of different angle. The most valuable asset that I would need to have in any type of crisis is community. Let's say we have a big economic breakdown, and I'm, as somebody who works in finance, I would lose my job, right? I couldn't afford my apartment anymore. Well, I need somewhere to live. And if I have rice or if I have gold, right, that might help me for a little bit of time, but it won't help me forever. But if I have a community, for example, somebody who has some space in his attic, then I could move in there because it's my friend, and he will, or the person will give me somewhere to live because I am actually an asset for him. And that's something where I think investing makes sense. Invest in people, invest in community. And of course, the downside here is you can't be lazy and just throw out money, because that's not how you build relationships. But you have to invest time and emotions and be sincere. And that's much harder than just giving away money. But I think that's an investment that is well worth it. I mean, we talked, or the second guy talked about the breakdown of global supply lines, right? And I mean, he was an apocalyptic Mad Max guy. But he talked about global breakdown of supply lines, right? And that people would not have food within 3 days. And I was like, well, I'm close friends with at least 4 farmers in our village. I know that I will have eggs, right? Because I will, on the other hand, offer them, for example, protection, etc. I will be an asset as well to them. And so they will make sure that I am fed, and I will make sure that they are safe or whatever they need. So this is something where I think that a lot of people really, in their preparedness plan, in their lone wolf fantasies, are mistaken when it comes to investing. Now, to not leave that out, even with that angle, you are able to invest money in a way that it makes sense. I'm still a big fan of participating in our economy. I think it's the best economy that that we have on this planet. But you can also think about investing in things that will make you an asset. For example, there is this YouTube channel, Pints with Aquinas, and he had a guy on, I can't even remember the name, but I remember that this guy set up a program in a city in Ohio called Steubenville, where people could come for, I think it was 3 or 4 weeks, even 5 maybe, lived there. They had they had a place to sleep, they had food, and they were taught to build timber frame buildings. So you really learn how to build something with timber frames, which is still one of the, well, widest available techniques in Northern America to build something, right? And that overall cost $2,000, including the food and everything, right? So I thought that, I mean, I don't have time for that to fly to the US only for that, but I think that's really awesome, right? I will invest some money just in learning how to fish, because I have my hunting license, right? I can do that. That's not an issue. But in our church, I got to know a guy who said, "Hey, are you interested in coming fishing with me?" And I was like, "Yeah, sure. That's totally down my alley. That's awesome. Let's do it, right?" And yeah, I need a few things for it. He might give me a loaner fishing rod for the first time, but I might have to invest a little bit. But that's a skill, that's an asset, right? And I deeply believe that investing in these things, it's not a huge investment to get that stuff, but it will be something that makes you more an asset to your community, and yeah, so it will get you better prepared. Okay, yeah, that was already my sermon for today. I just wanted to tell you why I, as a financial professional, would not advise that you actually listen to financial advisors that tell you how to invest your money, but to maybe get information from them, but make the decision ultimately yourself. And also show you a different angle that I currently take when I think about how to invest my or our money. Great, that's it for today. Thank you very much for watching. I really appreciate your time. Remember to follow the channel. If you liked this video, please hit the like button, and I'll see you next time.